Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so the pair that I will be speaking about in today's video is AUD USD. Now, the reason for which I have decided to speak about AUD USD is because this market is very near to providing to us a good trading opportunity. So obviously, I want to give you guys a full breakdown of it to show you exactly what kind of situation and opportunity we have on it. Now, as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective on the AUD, specifically on the AUD USD, because always remember that all currencies on the spot are traded against the USD. And by the end of the video, by using the combination of our technicals and our order flow, we will be able to understand where we can be looking for the highest probability scenario here on the pair. Now, starting here on the monthly time frame, what we have is a market which has just provided a nice impulse, correction, and impulse pattern to the upside. Now, generally speaking, after an impulse to the upside, what you want to see is the market provide a nice correction. Now, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high, what we can see is that we have a nice 0.32 Fibonacci retracement lining up exactly here, which means that this 0.32 is the first Fibonacci level at which the market is supposed to retrace before creating the continuation to the upside. So we still haven't retraced to the first 0.32, so there is definitely the possibility to see a deeper correction here on AUD USD. Plus, what we can see is that we have exactly the previous high, which is this previous resistance turn support, which hasn't been tested yet. So we can definitely expect the market to go all the way down to go and test this previous resistance, now turn support, to grab some liquidity before the continuation to the upside. So here on the monthly as well, we do expect a deeper correction to grab liquidity at this area before the continuation to the upside and completion of this impulse, correction, and impulse pattern to the upside. So here on the monthly, for the reasons that we have just seen, we do expect the market to provide a deeper correction because the market is quite overextended to the upside. Going down on the weekly time frame, what do we see? Now here on the weekly, we can see that at the moment the market is creating a rejection away from a very strong weekly demand area. In fact, in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, which means that this red candle is a strong demand zone that the market is currently testing and from which we did expect the market to provide a rejection to the upside. So here on the weekly, we are testing demand and we're getting a nice rejection to the upside. Now, if we look closely, what we can see is that the market currently at this area has also previous support, which is now turned resistance. So the market is currently testing as well previous support on resistance, which could easily lead the market in creating the continuation to the downside. So here on the weekly, two things to keep in mind. The reason for which we're getting this rejection is because we have demand at this area. However, at the same time, we also have here previous support term resistance, which was created in the moment in which this green candle here was printed, from which we do expect the market to get rejected to the downside. So basically monthly and weekly are aligning, but we have a negative confluence factor, which is the demand that we have at this zone. Going down on the daily time frame, what kind of price action and structure we currently have. Now here on the daily, first of all, I had spoken about AUD USD a couple of times in the past. I spoke about AUD USD after this M formation. I made a full breakdown when the market was here, explaining all the reasons for which from here we expected the market to provide a nice correction, and that is in fact exactly what the market did. Then from here, I made a full breakdown explaining all the reasons for which we wanted to see the market create the continuation to the downside. And again, That is exactly what the market did. Then we had the creation of this M pattern, and I made a full breakdown from here, explaining all the reasons for which from this level we expected the market to provide this move to the upside to go and complete the pattern at the neckline. And again, that is exactly what the market did. And by the way, I will link in description this previous analysis. You can find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now at the moment, what we can see here on the daily is that the market has just provided this W formation, and it is currently testing the previous resistance, which is now again resistance here, from which we do expect the market to provide a move to the downside. So here on the daily, we have a nice W formation, which is a bearish pattern, from which, as I just said, we want to see the market create a move to the downside to complete it at the neckline that is testing exactly the weekly resistance that we have already identified. So we have weekly resistance with a bearish daily pattern, and on the monthly we are overextended. So everything is indicating for a possible move to the downside here on AUD USD, at least for the completion of this daily W formation. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are doing in the market, and if we get the data for the AUD, and keep in mind that if I'm checking the AUD, I'm already checking AUD USD because all currencies on the spot are traded against the USD. So if I check the data for the AUD, I'm actually already checking AUD USD. What we can see is that with the last reports, we went from having 5.4k net positions all the way down to having minus 1.4k net positions, so a strong decrease of the net positioning, with the last report showing 1.6k shorts added on the AUD and 600 longs getting closed, reaching 57.2k short positions and only 55.7k longs. So the AUD is getting quite weak, which is exactly what we wanted to see, because we want to see the market complete this W formation at the neckline. So how we will be approaching this potential opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes are the best timeframes for the direction of the market, combined with the COT data. However, the best time frame when it comes to confirmations and entries is the 4-hour and in some occasions also lower time frames. So the way in which we will be approaching this with students is being reactive, as I just said, so monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a bullish market as we have right now from an intraday perspective to a bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding AUD USD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this W formation at the neckline, which is the previous resistance, now turned support from a daily perspective. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.